right. This is Patrick Grimes, and I'm really excited to be here today with some awesome people to talk about a completely new alternative investing strategy. We have not dug into this level before. Two heavy hitters to talk about it, and that is top currency trading strategies for passive investors, also known as Forex, right? What is that? How does it work? What are the risks? We're going to dig into all that today. How to be successful at it. Is it passive? Is it not? These are all really cool things, and I'm excited to learn about it along with you. I haven't done this, and this is one of the passion projects. This is my passion project here. This is our Alternative Investing Mastery series, and put on by Passive Investing Mastery and myself. And why are we doing this? We're doing this because we want to educate investors to achieve mastery in the art of passive alternative investing strategies. So you keep your life back. You can be passive, but you can get into alternatives. You're just all about the stock market. This is not the right event for you or the right series for you, because we're about non-correlated investments outside of the stock market, ones that don't rise and fall together. Now, we educate here. It's important for us. I'm on over 100 podcasts and books. I've written articles in Forbes and others. It's all on my website. Actually give away a couple best-selling books for free on our website if you're interested. I actually sign them and send them out, help inspire people along their journey. And we have this bi-weekly webinar series, which seems to have turned into a weekly webinar series, always featuring a blue ocean approach of different alternative strategies. Now, we're doing this because we believe financial security happens through a lot of different allocations into different markets, which can only be achieved into these very unique, kind of novel alt strategies. And we want you to get to that point where you have true, not just independence, but security and the abundance, the financial abundance you need for the causes you care about most. That's our mission here. We do that through education and through sponsoring best-in-class alternative investments, which you can check it on our website. The next event, before we go any further, make sure you jump in there. 1 week from today, venture capital for passive investors, syndication strategies that works. I don't do a lot of venture capital. It's not really my bag, but a lot of people do. And a couple friends of mine that I'm in very large real estate deals with that have invested huge, and we're some partners in some of these deals. Isaac Bennett works for a venture capital firm. I'm in some masterminds with him, and he is doing real estate and venture capital. Trey Taylor is a family office. He manages his own and all of his relatives, his extended family's funds. And he also does angel and venture. So we're going to talk about it. He's going to be there as well. It's going to be a fascinating conversation, known both these guys for some time. And what are the difference funding options in venture capital, risk rewards, how to leverage syndications, what are angel investments and family offices and high growth startups? What are these things that allow you to really build that true resilient portfolio? So we'll go through all of that today. But today, currency trading strategies. Really excited about this. So let's go to our panelists right now. We have Andrew Mitchem. It's tomorrow for him. He's in New Zealand right now, so I appreciate you jumping across the pond virtually for us, Andrew.
Lovely to be here, Patrick.
And by the way, Forex is not like real estate. It is global. You're trading global currencies. So these educators is over 108 countries he's trading in right now. It doesn't matter where this expert is. If he's somewhere on the planet Earth and he's got something relevant to say for you in America about Forex trading. So he's a full-time currency trader and investor since 2003, founder of the Forex Trading Coach, providing training to traders in over 108 countries. Pretty awesome. Developed a profitable trading system after initial challenges. I would love to hear more about that. Advocates for the flexibility and freedom offered by currency trading. Really excited to have you here, Andrew. And on the other side of the Pacific Ocean, where I'm kind of sitting in the middle, is Steven Primo. Primo is the oracle here, I think, on the call. Is it okay if I call you that, Primo?
That's fine. Steven? Everyone calls me that as well. That's fine.
well, I'm glad because it made sense. 48 years as of this year, he's been trading. He's been trading for 48 years, starting in 1977 as a floor reporter on the Pacific Stock Exchange, former stock exchange specialist for Donaldson, Lufkin, and Jenrette, managing markets in over 50 stocks, co-developer of the PTS Primo charting platform focused on trading education. Once again, perfect. Glad to have you here. Featured in Stocks and Commodities magazine. He is a contributor for Trading Markets in FX Street and Trader Expo. His proprietary methods for trading are used in over 100 countries. This is a global strategy. Couldn't ask for a better group of guys. Let's start with Andrew and then go to Steven. And I'd like to hear, why are you excited to be here today, educating us on currency trading strategies? Go ahead, Andrew.
Hey there, Patrick. Hi, everybody. I'm here today because I absolutely love trading the Forex market, and it's just completely changed my life over the last 20 years. And the more that I can help do that to other people, the better. It's an awesome market to trade.
And Steven.
Hello, everyone. Thanks for inviting me today. And similar to what Andrew said, I've been trading for 48 years, but roughly about 20 years ago, I really wanted to start sharing what I had learned, because you can only go so far if you're just sitting in a room trading by yourself. But to a point, you have to share with other people, and that extends your next level of trading. So I started teaching, and I'm excited to teach people. It really is a lot. It gives you a lot more satisfaction than just sitting alone in a room trading by yourself.
All right, so here we go. We're going to dive into the discussion, but first I want to make sure that we see a lot of people here participating in the chat. David, Amital, Bill, Kenneth, Anise, thank you so much for already jumping in there and starting to participate. Keep your questions coming. We're going to have lots of questions during this event, probably 40, 60. We're going to answer questions as they're relevant to the current topics that we're talking about. I may punt on some questions, and then towards the end, when we reach those topics, weave those into the conversation. If we miss one, that's our bad, but we're going to go back through it after the 45-minute mark and go through a very laser-focused Q&A, do our best to get through all of those questions, but keep them coming. We usually have 40-plus, 60-plus questions, so it's a very lively discussion. Looking forward to this today. So without any further ado, let's jump into the discussion. So what is currency trading? It's what we're going to start out with, and we're going to break it down in very simple terms. I like to say that so that my grandmother's knitting circle can understand. So let's break that jargon down very simply. Andrew, what is currency trading? How does it work?
Yeah, Patrick. So to break it down real simply, currency trading, when you trade currencies, you're actually trading what's called a pair. So you don't just trade one stock or one thing. You trade something against something else. So as an example, the euro US dollar. So it's traded as the euro US dollar as a currency pair. And when we look at it, we can either buy or sell that currency pair. So if the euro US dollar looks like it's moving up, effectively we're looking at strength in the euro, weakness in the US dollar. If it looks like the euro US is falling, that means we're effectively looking for selling the euro and buying the US dollar. So they're all traded together as currency pairs. There are 8 main currencies that we look at, and that would be the euro, US dollar, Swiss franc, Canadian dollar, Australian dollar, New Zealand dollar, Japanese yen, and the British pound. So it makes it really easy because there's mainly just 8 currencies to look at.
So yuan, the Chinese yuan's not on that list.
We do have those as well. But for people that are wanting to start this as something new, I would predominantly focus on those main 8 currencies. They're the most traded. The cost of doing the trading is very small in terms of the spread. The liquidity is fantastic. And what we do when we start looking at technical trading, it has the highest reliability. But yes, there are, like, you can trade the Mexican, the Swedish krona, and and lead on to other currencies and other markets, but I would focus for someone new, especially on those main 8 currencies.
And Amitai is saying, what is Forex?
Yeah, so Forex is foreign exchange currencies. It's just short for foreign exchange. It's basically currency trading, Forex, it's the same thing.
We wanted to call it currency trading instead of Forex, so it didn't sound so foreign. And so they are one and the same here. Steven, let's hear your thoughts.
Yeah, I ditto exactly everything, the same thing Andrew said. The main thing is that the trading is actually simple, because I've noticed through my experience in trading currency pairs is that when they go in a certain direction, they really go. I mean, these are some of the best trendy markets available. And since we feel that the best way to become a consistent trader is to be in sync with the trend, I think there's a real advantage to trading currency pairs. If you're able to find out through price behavior what the trend is and get on board, you can really have some nice gains and really have some nice profits.
So this is interesting to me. So I did some research in advance. About 24%, you talk about the pairs, 24% of the trades are between the euro and the US dollar. That's fascinating. And I think it said 66% are in those 9 most common currencies overall.
Right.
So the majority of it is in those top currencies. So you're really talking about trading between, call it 9 or 10 different currencies for the majority of it. And then a quarter of that, or the majority of that, is actually the US dollar and the euro. Is that right?
That would be exactly right. And that is exactly what I would focus on for those reasons, given the quality of the trade setups, the cost of doing it. It's so much better just focusing on that. And the beauty of Forex trading is you don't need to know about like 100 different companies or anything like that. It's just 8 currencies and what moves them. And as Steven said, the moves that you can get are huge. The other beauty is you can, of course, buy and sell. So you're not just buying something and kind of hoping it's moving up. You can make exactly the same return by selling, let's say, the euro US dollar, and getting a profitable trade when that market falls, as you can when you buy it. You just need to be on the right side of the market.
Right. And what we had talked about before, in terms of keeping it simple, I think, a lot of, especially beginners, can really get overwhelmed deciding what market to trade. The great thing about currency pairs, as we've stated, if you stick with those select numbers, those basic ones, it keeps it a lot simpler, especially when you're learning how to do it. So you're not going through 5,000 stocks or tons of crypto that you don't understand what they are. You're just focusing on these, the small number. It makes it a lot easier to get involved.
So Anis here, who follows you, said that Primo makes it simple. All right, looks like a great educator. So David's saying share, baby, share. So very excited about that. And we're hearing a little bit about Mitchem's humble beginnings in the chat. So you guys have got a great following here, much more exposed to my audience than I originally understood. This is great. So let's talk about how active and passive is this? Because this is actually a passive and alternative investing mastery strategy session. A lot of the investors are like myself. They were, when I was a hardworking professional, successful at what I did. I was good enough to be able to do what I did, to be able to make some money, to be able to invest, right? But I'm busy on my day-to-day. So how do you talk to investors about evaluating the active and passive methods by which you go about investing in this? Why don't we start with Steven?
My opinion is, I don't think everyone or trader should be one or the other. In other words, you shouldn't be totally active in something, involved and just, staring at every pip or tick. You shouldn't be totally passive either. I teach my students that they should be actually involved in part of the process, because that's how you're going to really become consistent. I think no 2 traders should ever trade alike. Some traders have a larger account, some are new, some have been trading 30 years. Everyone has different risk parameters, so that will determine how active you are, how passive you are. Another determination is thinking of what time frame. If you're going to be intraday trading, you have to be a lot more actively involved, as opposed to someone who's looking at weekly or monthly bars, and you can pretty much set your parameters and then sit back and watch. So it all depends. The first step I believe that traders and students of mine have to make is, you have to determine what type of trader you are. I mean, are you the type that wants 20 trades a day, or you want 1 trade every couple of months? And then you can decide how active or how passive you should be. But I don't think it should be 100% one side or the other. That's just my philosophy.
Andrew, you have a take on that?
Yeah, sure. Look, I completely agree with Steven. The beauty of currency trading is we have the option to look at various time frame charts. And the way that I believe that we both trade, myself and Steven, is it kind of doesn't matter what currency pair we're trading on what time frame chart. So to talk about like how much time you need, I always say to people, once you know what you're doing, you could quite easily trade in 30 minutes a day, probably less. But also, you could trade on weekly charts or monthly charts, like Steven said, and just look at, your charts once or twice a week or a month. It depends what you want to do, but I still think you need to have some involvement in what's happening. You can't just sort of put something on and then forget about it. I still think while you're learning, especially, you need to understand how the market works, what you're looking for in terms of price action and candle patterns. But it certainly isn't something that you get that perception online that you have to be there at certain times of the day, or you have to sit watching every pip of movement, like Steven said. You don't. But a lot of people start like that and they fall into the trap of doing that because people think that you have to trade more to do well. The reality is trading less is better, and just having higher quality trade setups.
So when it comes to passive investing, it's either you're just like you pointed out, you need to be active. So you don't want to just buy something and forget about it, right? Like you're not necessarily going to be a long-term holder when it comes to just a Forex investment. Is kind of what I'm hearing. There are other ways investors can be passive, and I'd love to dig into this a little bit because I know somebody who's I rub shoulders with occasionally, and they put together a Forex trading strategy. And when I think the Japanese bond inverted, and that it caused a big challenge for their strategy. Their strategy was a bot, and it was the way to make it passive. They lost some money. They lost some money for two reasons. One was because it was leveraged, and two was because it actually traded negatively into a kind of a down cycle on the yen. And I guess these algorithmic tradings, the strategies, they kind of account for like 70% of the daily trading volume. And daily trading volume is like massive, right? And then there's a bunch of them that are using these bots, and some are using AI bots now. And I'm actually, these people are out there AI trading Bitcoin right now as well. But let's hear your guys' thoughts on kind of these algorithmic trading methods, these bots, these ways that people are trying to make these things passive. Kind of hear what your thoughts on that.
Well, right off the bat, I can tell you I'm totally against it. And it's only because, a lot of people think I'm old school because I've been trading so long. But as I stated earlier, you have to be a part of the process. I think one of the main reasons why traders fail in any market, currency pair, if you're an investor or whatever, is when you take yourself out of the game. Now, they can be either having a fund where someone does it for you, or relying too much on an indicator telling you whether to buy or sell. But you have to be a part of the process. And so I've had a number of students I've educated before that said, well, why don't you just have, algorithmic trading or just something that's just spits out buys and sells? It goes against my philosophy where you would not be a part of the process. So it's just something that I've learned through the years. And to tell you the truth, when I left the floor, I was hired to manage money and also to teach systematic trading at a number of firms. And I taught these systems, which were very similar to what's going on now with AI, but they were all systematic. You just had to put in the numbers and they spit out the buy and sells. And they had fantastic research going back 10, 20 years, 80% wins. It was just unbelievable, the different markets. And then when 2008 hit, they all crashed. Everything went down. And what happened to all the research? What happened to all the great 10, 20 years of fantastic numbers? It all goes out the window. So it was because, you have to make adjustments. You have to be able to go with the ebb and flow of the market. And that involves what we were talking about. It can't be just passive. You have to be a part of the process.
Yeah,
so
absolutely.
you taught algorithmic trading, but you are no longer a believer in it after the 2008, because you feel like you actually need to be there, having that human judgment, seeing something like in 2008 and interfering with the algorithms, right? Is that what I'm hearing?
Exactly. The simplest way I could say is that I'm not even a big football fan, but I know in football, okay, the quarterback can come up in a line of scrimmage and have a play already, and everyone knows what the play is, but then he sees that the defense has shifted. It's different. So he'll yell out what's called an audible. telling the rest of the team that we're kind of changing and editing things a bit because the defense has shifted. So the play won't be able to run the original way. It's no different when trading. You see that, wow, you have to be a part of the process because maybe there's more volatility today. Maybe there's no volatility today. Maybe your risk is larger. Maybe it's less. So you'd be able to change, ebb and flow with what the market's showing you.
And we're addressing some of Bill's questions here about how do you know what moves around in the currencies, and also Michael, is it manual or algorithmic, right? I think it's it sounds like it's a little bit of a combination between the two, but you've got to be ready to do the audible. The engineer in me really struggles with this because I was an automation and robotics engineer, and I think of things as systems and processes. But having that human audible is necessary, and why we don't have robots everywhere on every manufacturing floor right now. Andrew, let's hear your thoughts.
I couldn't agree more. Well, Steven said maybe we're both old school, but I think he's absolutely right. And I can tell you from a lot of personal experience that I've tried every bit of AI, every trading robot, every algorithm there ever was, bought them, tried to create them, and they just don't work. I think a lot of people run into that pitfall of they see something that was that's been back tested that looks really good in hindsight, and it goes live and it just doesn't work. I really cannot stress enough from personal experience how much human common sense and seeing something and reacting to it will massively help you, not only in your results, but also in that actual knowledge that you have of being able to do this for yourself. Whereas even if you had a system that you got from somebody, how do you know when that stops working if you don't have that knowledge of how the markets work? How do you know when the markets change and you need to adjust the parameters? Just buying something, leaving it to run with your money, your hard-earned money sat there, is a huge gamble. And I personally, I love the fact that I have the knowledge of what to do, when to do it, or when not to do it.
That system usually stops working the minute we start trading it. That's when it usually stops working.
And we've all done it. So the issue is that people see online and YouTube and other TikTok and things that all these things, because someone's generally trying to sell something, and I promise you it doesn't work.
Right.
Let's talk about this. But give me a hint here. So it is sounds like it's a lot of book smart, or there's a book smart component to it. Then there's a street smart component to it, right? And then there's the science and technique, and then there's the art. Are we talking? It is the art's the audible. Is it 50% art, or is it 10% art, right? And 90% algorithm and science and technique here. What do you guys think?
Well, for me personally, I put about 25 to 30% rule-based, pattern recognition, or just looking at price behavior, and it's rule-based. It's not systematic. And then I would put basically, or I should say, I'm sorry, everyone. I mean 70% rule-based, and then 30% I leave for intuition, for experience, for audibles, calling, being part of the process. So 70% rule-based and 30% I leave for making my own process and decisions.
I love how you can answer that question. Andrew, what are your thoughts?
If I had to go first, I'd have said exactly the same. This is quite spooky, because it's the way that I suppose that over years you have trial and error and you figure out what works. And yes, when I see a trade setup, I have rules for my entry and exit levels based on the way that I trade. But there is certainly a little bit of discretion in what I look at on the charts as well. But it's like anything. It's like any skill that once you can do it, you can kind of do it. It's like watching a kid ride a bicycle. It's very complicated to start with. And then when you know how to do it, you just jump on the bicycle and go. And I believe that kind of art form of trading is very, very similar. You have things you have to do, and then you have other things that you kind of just get over time.
The art form of trading, right? And we like to say the mastery in the art of passive alternative investing here. And so there's an art to it. So let's dig in a little bit more. What are the actual ways that people would engage? I say you've got to go learn something. You got to go educate yourself. And then you've got to go practice. And I get the education, right? You've got 70% role based. You got got to practice to get to 30% intuition. You got to be out in the field actually doing this. How do passive or investors learn? How long does it take to actually gain the confidence necessary that you see for them to be successful at this? I mean, I've seen some numbers out there. They're not. We were Googling around trying to figure out. It says between 72 and 84% of online Forex traders lose money. Right. So I'm wondering.
Yeah, I was going to say the same thing. I think it's higher.
And 29% of retail Forex traders achieve capital gains, meaning they actually get a gain, right? So those are not numbers that I'm typically seeing in real estate investments. So help us understand, how do you educate to beat those numbers, to beat those statistics, to get over that book knowledge, rule intake, and then to learn the art for your students to be successful? What's that process?
I'll let you go, Andrew.
Okay, so for me, it's finding a strategy that suits you as an individual person. That's what it comes down to. And it took me 4 years of going around in circles and buying things and beating my head against a brick wall, because I'm not a sort of person that gives up, but I kind of got very close. For me personally, I then realized that the system that I had to trade meant I wasn't looking at the charts all day, and I had to actually have some logic behind it. Because when you start as a new trader, you can get demo accounts, like free kind of virtual money accounts. And the downside is that people get inundated with indicators and all these lines crossing over everywhere and arrows and dots and things. And it looks really cool. But the trouble is they fail to look at what's actually happening in the price. And they fail to understand the things that the big players look at, like support and resistance and news events and things like that. And so for me, it's about someone needs to use the demo account, treat it like it's real money. The danger is they're going to start off with like 100,000 demo account and they go, fantastic, I'm making all this money by just guessing what they're doing. And of course, when you go live, you're probably unlikely to go to 100 grand live account. So I tell people to start with maybe like a 10,000 demo, treat it like it's real. Make the mistakes that you're going to have with your risk management going wrong and your lot size is incorrect. Everybody will do, but treat it like it's real and develop a strategy and a system that you understand, that you have confidence in, that you trade professionally on a demo account before you even think about going live.
Is that a year? How long?
It could be if you're doing it for yourself with no help. Absolutely. Like I said, I took 4 years. And it's very tempting to get to those stages where you go, oh, this is not working. So you try to reinvent the wheel again, or you buy another indicator or robot like we just talked about, and you're kind of very easy to get distracted in today's world online. So it's about stripping all that down from, if you're doing it yourself from scratch, it's about picking the best of different things and working out what's going to suit you as an individual person.
Steven, there's the question. Let's hear your approach. This is a great answer, Andrew. How do people get in there in this world where the majority of people are losing money? They want to get into this asset class. They know they need to educate themselves, not only just on the books and the rules, but they gotta build that intuition. They gotta get that art of it down to make those audibles. How does somebody just starting out get in there, and how long does it take them before they could go live and actually start winning?
Well, I believe that statistic is actually higher. I believe upwards of 85 to 90% of all first-time traders lose money. And when they say lose, it means that they actually lose everything, not just to have a bad month. They give all their little nest egg away. So I remember myself, when I first started trading on the floor, I had a terrible time. For the first year and a half, I couldn't make a dime. And I was lucky to have some mentors who saw what I was doing. And I remember what they said. They said, Steve, your trading just is far too complicated. You have too many indicators. You're watching far too many things. You're too many systems, everything. And then they said, it's the easiest thing in the world to overcomplicate your trading, but it's the most difficult thing in the world to simplify. But once I started to simplify things, that's when I started to become consistent little by little. So I think regardless if you've been trading 20 years, 30 years, 50 years, or a couple of weeks, you have to keep it simple. Now, having said that, I think you have to find a good mentor or a good teacher. Andrew, I think, would be perfect. Just listen to him. He's the type of person I would want to go to if I was trying to learn how to trade Forex. And you want to take everything from him, but also get your hands on everything, books, periodicals, and then you have to practice. There isn't any other profession in the world where you don't have some form of practice or paper trading. I mean, think of an athlete. They have a practice, they practice before the game, or even they have these sessions before the actual season starts. An actor has your rehearsals. It's the same way with trading. I loved Andrew's idea of, instead of using the $100,000 demo account, which I know everyone does, I've done before in the past, you start with a $5,000 or $10,000. That's a great idea. Start with that, because that's closer to reality, what you'll be doing. And the thing is, I tell my students, when, ask me questions, whatever you want and whenever you want. And when you finally get to the point where you stop asking questions, that's when you can start actually trading with real capital, but keep it as small as possible. So with some people, it's maybe takes a couple of weeks to get to that point. It may take 6, months or a year. It's different for everyone.
And this is great. And what's the payoff, right? The payoff of actually getting good at this is huge, right? Because people are making money in it. The industry has grown 432% between 2000 and 2019. I mean, that's huge. Right now in the US alone, it's 1.9 trillion daily average turnover. So there's a lot of trading going on daily. And I think somebody threw in the chat here that there's 6 trillion per day overall in Forex. I don't know that one, but we're talking like, and then I saw some other numbers that professional Forex traders typically achieve monthly returns ranging in 5 to 15%. Now, is that what you hear? Because those numbers seem mind blowing, and monthly returns, is that annualized? Like, to be really good at once you get good at this, you're a couple of years in, right? You've done this, you've gone through, had a mentor, you've got good at it. Answering the questions, we got a couple questions from Anise, Robert, Michael. What are these returns? What's the payoff? What is the expectations that people should think about for Forex trading?
Well, Patrick, I knew you were probably going to ask that question, or somebody was, and you probably can't see it in front of here on my camera, but I've said on here, I've written it down just to make sure that I quoted this right. And I said, of course, it depends on your risk. How much risk you take depends on your return. But we are massive advocates of incredibly low risk per trade. But considering that, we would like to suggest that you're probably, once you know what you're doing, going to make between 5 and 10% return per month on your account. Just last week, we had a 3.6% gain. We're going to do 3.6 gain in the week. But I'm trading only 1/4% of my account risk per trade. It's a really, really tiny risk, so very low drawdowns. Are we going to do 3.6% every single week? No, we're not. Some weeks will be more, some will be less, of course. But I'd very confidently say that once you know what you're doing, with very low risk per trade, there's no reason why you can't make 5 to 10% on average per month.
So let me just understand. So you said, say hypothetically you have 100 grand in your account. You said you're only trading like maybe 3 grand of it, and then of that 3 grand, you got a 3% on 1 year. Or what was that? What was the numbers? Like, you're not trading it all the time, right?
No. So if you're on a $100,000 account and you're on a 0.25% risk per trade, the most I'm risking is $250 on a trade on a $100,000 account. Very, very tiny. That's just me personally, because I trade on things called prop firms as well. I said to my clients, I would never risk more than 0.5%. So a $500 risk on a $100,000 account per trade.
Per trade, and that trade is once a week.
So if a trade goes against me, I lose 0.5% of my account size.
Okay, got it.
I have to commend you, Andrew, because I usually am 1%.
Right.
But wow, a quarter. That's amazing. That's great.
And you're getting 5 to 10%.
Keeping your drawdowns low is key.
I'm sorry?
I think keeping your drawdowns low is key in trading
yeah.
currencies, because there's two things that, like probably with all the people you deal with, Patrick, is your head and your heart you have to control, because it's emotions and it's money. So I like to say to people, get those two under control. How are you going to do that? Have a strategy that you have confidence in, but also make sure that your losses are very small. But when you have gains, they are several times your risk.
So we're answering Kenneth's question here about the returns and the risks and how that is. So you did say, and the audio is a little bit hard for me to hear sometimes, Andrew.
Right.
So 5 to 10%. Is that right? You said, and that was
Between 5 and 10% per on that per month.
month. So, oh my gosh. So the statistic I saw was monthly 5 to 15, and my mind was blown. You're actually saying you're seeing a seasoned investor, you're getting 5 to 10. And of course, there's a bit of volatility, but you're also able to mitigate your downside risk to 1/4%. And I just heard Steven say he's doing 1%. Steven, let's hear your take on what would they're out there, they've been doing this a while. What do you think is reasonable under your tutelage, your guidance after they've gotten good at this to be able to achieve in terms of returns?
Well, see, my take is a little bit different. I don't feel that you can quantify it by saying this is what you can averagely make, what a student can make after trading for so long or learning. I think everyone's different. I have some students that have been trading and students of mine for a couple of years, and they're making phenomenal. And the same other students in the same courses are basically breaking even. And then there's others that are making 20 or 30%. Everyone comes in with different parameters, and there's nothing wrong with that. I really think what we try to do as traders, we try to make trading into like a 9-to-5 job. Like, okay, well, if I get this, I'll make 60 grand a month. Or if I take this job and learn this skill, I'll make 100,000. Trading is not like that. Your trading results are directly proportioned to how much work you put in, what you're controlling with your risk, what your account is, and how much you use that 30% of intuitive reaction. So I don't think you can, I always tell my students, it's not the type of thing where you say, I'm going to make $500 a week. You can't do that, because what happens if one week you don't make 500? Well, then the next week you have to make 1,000 to get back on track. And then if you lose 300 that week, then you're really in the hole. Then you really dug yourself lower, and mentally, psychologically, you really dug yourself a hole. So I think the best thing to do, the best thing a trader could do is, once again, practice and learn, and being able to trade another day is the best result you can get. That's what you want, because so many traders, that 80-95% level, wherever, they're gone. They can't come back anymore. So you just want to be able to come back again, because that will ensure longevity. And in my opinion, longevity is really success.
Correct.
And we talk about that a lot, capital preservation, right? And keeping your risk low, because and what we talk about is, if you invest $100 and you lose half, right? You've only got 50 left. It takes 100% return on that to get to break even, right? But if you lose all of it, it's an infinite return required to get back to your 100, right? It's impossible. It's asymptotic. The more you lose, and so you may be out of the game. That's what Steven's talking about. Live to go another day. Don't risk it all. That actually brings me back to what I haven't heard you say, and that's leverage. That one of the things that freaks me out about Forex and Bitcoin trading and everything, the reason why I don't get involved, because I'm actually a lot about low leverage. 2009, I was highly leveraged on a pre-development, and I lost my ass when that market took a swing, and it dragged me through the coals for years. I learned a lot about leverage. They, in Forex, still do sometimes 100 to 1. That means, you put $1 in, and now you're trading $100. Is that, and that could collapse you much more than your principal, right? Tell me a little bit about how you guys think about leverage, and these just this frightening numbers to me, and why I should be a little more comfortable with it with Forex trading.
Because I'm outside the US, you have a lot more restrictions over there with your brokers, but outside the US, you can trade up to 400 to 1. I've always traded at 100 to 1 personally. It makes no difference to me. I mean, leverage is a double-edged sword, of course. It can be your friend or it can kill you, depending on if you don't know what you're doing and if your risk is not sensible. But if you keep your risk very low, the leverage isn't really an issue for me. I've never had because I'm only risking a certain percentage per trade. It doesn't matter what the trade is, what the direction, what the currency is, what the time frame, what the size of the stop loss is. To me, that becomes irrelevant. I look at patterns and candle patterns, which we could potentially talk about later. So every trade has the same low and known and equal risk.
Yep.
So
Wow.
Because I don't have lots and lots of trades open. The leverage is never an issue.
Once again, we're on the same length. I mean, because we've been trading this long, you start to see what works and what doesn't, and what you should put your attention on and what you shouldn't. He's been trading. I think when you get past the 20-year mark, you start to see what's of importance and what's not. And leverage makes absolutely no difference to me, because I know I'm only risking 1% of my capital. That's all I care about. So
right.
it doesn't matter if I have 1,000 to 1 or 2 to 1. If I'm risking, 1%, $100 or something, that's it. That's all I'm concerned about. Yeah.
Patrick, one other thing to add to the last question, if I can. You talked about, it kind of brings on from the leverage. You've got to trade when the market conditions are right, like anything. Sometimes there'll be fantastic conditions and you'll see quite a number of trades. You've also got to know when to not use that leverage and don't kill yourself by doing silly things. If the market's not showing you the trades, don't trade. There's nothing wrong with not trading. Sometimes that's the best thing to do.
True.
Okay, so we're getting to that point where we're actually at the 45-minute mark, and we've been about half the questions here. We got about 30 questions to do there in the Q&A. Perhaps you can start out. Let's just do a final question of what's the best advice that you can give an investor that has no idea what Forex trading is, but they're interested, they're attracted to it, they want to learn, they want to get involved. What's the best way to get started in the game, and how do you make sure that you would guide them into saying not losing money and making sure that they're going to be successful in the long run? Why don't we go Andrew and then Steve, and then after that we're going to have you guys tell everybody how they can get a hold of you, reach you, and then we'll go to the Q&A.
Okay, so if you're brand new, you've got to make that decision on whether you want to do this alone or whether you want to do this as part of the group. That's really what it comes down to. Do you want to spend a lot of time developing something? Do you want to potentially pay someone to get something that's kind of proven? I think having a community is massive. Doing it by yourself, like Steven said at the very beginning, it gets incredibly lonely. No one to bounce ideas off. Try not to get caught up in the whole social media hype. Try to avoid all the flashy indicators that the brokers will have on their platforms. Get on a demo, make it real, treat it like it's real money, treat it like a business. Your 10 grand account, pretend it's $1 million account. Just treat it like it's real. Yes, you'll make mistakes, but don't gamble. If you've got a gambling mentality and if you're focused on how much money you're going to make or give up your job tomorrow or next week, don't do it. Learn the system, learn how to trade properly, learn the theory, the strategy, the method of doing it. And if you do that properly, the money will follow later. It's just going to take you a bit of time, but it will follow if you take the time to do your homework first.
Great answer. I would say in the beginning, there's a lot of soul searching you have to do, especially if you're a beginner, because I can't tell you how many students I've had that said, I want to learn how to day trade. I think it's amazing. I've heard this guy at a party that said he makes $100,000 a month. He has 10 trades a day and it's sexy and exciting. And then you go there and I've taught them, okay, well, I'll teach them some day trading strategies, and they can't pull the trigger, or else they just lose money because they're not trading according to their persona. Or else someone would say, well, I'm an investor. I'm very tight with my money. I just want to invest. And then they find it incredibly boring and they can't just wait, every month for one signal. And the first thing you have to do is find out what type of a trader you would you want to be in front of the market, watching it all day long, or do you want to just passively look at it once a week or something? And then once you do that, like Andrew said, get your hands on everything, look online, but don't overcomplicate things. Just keep it simple. Paper trade. And the easiest thing I can tell students right now when you're looking at Forex markets, or I tell any market, doesn't matter, is to look at a chart of anything. Look, for example, I'm looking at the euro dollar right now, a daily chart of the euro dollar, and apply a 50-period moving average to it. That's all you have to do, a 50-period moving average. And what we teach our students is when price is above, then that's when you should have a buyer's bias. When price is below, you'll have a seller's bias. It's that simple. But that one little step will help you to become a consistent trader. Now, obviously, you have to add some structure in the form of a strategy or some pattern or some signal. But just look at any chart you want, any time frame, and that little technique will help you. It doesn't cost anything, and you can do that right now. Like, for instance, right now, the euro dollar is pushing up against its 50-period moving average, which is suggesting it may want to go higher. So this is just something to help you see if you would like to learn how to trade this way. And it's very simple, doesn't cost anything, and you can do it right now.
Okay, so here's the chance. You have two gurus here. One that's nicknamed the Oracle. Let's have you guys both, Andrew and then Steven, tell the audience how they can reach you. What do you have to offer? You think you both train and coach in this strategy. Do you have any free giveaways? Make sure you drop your information in the chat. We now have put up a slide with your contact information, the call to action web address that you gave us to give out. Make sure you screen capture that, take a picture of it, and drop it in the chat. Andrew and then Steven, go ahead.
Yep. So I've been coaching for 16 years, Patrick. As we mentioned, got clients right around the world. And I just really encourage people, if they have any interest, to jump on the masterclass that I have on there. It's on demand, so it doesn't matter where you live in the world. It's only about 20 minutes long. I've got like ebooks on my site. I've got calculators for risk calculators. But the first thing would be to jump on that masterclass, have a look at it, see what we do. I share some trades on there, some very basics about trading, how we trade, how we teach. And then it's up to the individual to decide if this is something that they want to pursue further or not.
Steven?
Okay, people can contact me at protraderstrategies.com. You see there underneath my name. That's my sister site. Every week I give free webinars. I also talk about all the different courses and the different strategies I have. In fact, if you go there, I'm giving a free webinar tomorrow at 10 a.m. Pacific time. And I'll talk about a strategy, one of the first strategies I learned from my mentors that I continue to use to this day. And I'll give you a couple of the entry rules to that tomorrow. And you can see it doesn't cost anything. You just go to our website and sign up there. And you can find out more about us. And once again, I've been trading for 48 years, if you can believe it. And I've seen and traded just about everything imaginable under the sun. And so I know what works in terms of consistency, and I know what doesn't. So that's really all we teach, ways in which to become a consistent trader. We're not promising the world. We're not saying you're going to retire in 6 months, but we'll try to make you consistent or help you at least get started in the right direction. My teaching is extremely simple. It's not complicated. In fact, we make it that way on purpose, just to whether you've been trading 50 years or a couple of weeks, it makes absolutely no difference. So lots of great information. And as I said, we have a free webinar tomorrow. I'd love to see you there in the class.
Andrew, Steven, thank you so much. So we're going to, before we jump into the Q&A, if you don't know who I am, it's Patrick Grimes with Passive Investing Mastery. We not only put on education, but we also have investments. We have an income fund, which provides steady Eddie cash flow, predictable cash flow through notes, fixed income notes. We have 90-day, 6-month, and 1-year notes, 7, 8.5, and 10%. In a diversified loan pool. It's a pool of loans to commercial real estate. We also have Class A and Class B shares. Those give much higher cash flows that vary right along with the profitability of the fund, and the 13, 14% since inception. So really strong cash flow, opportunistic with high interest rates at a time when the banks are pulling back. We're able to get great loans on performing assets and profit from that. Now, if the operator needs or wants out, we also have an acquisitions fund that's taking advantage of the best commercial real estate buying opportunity of our lives in commercial real estate acquisitions. It's a great opportunity to just pounce right now. And like literally, I lost everything in 2009 and 10, and I wasn't able to win from that. But right now we are winning extraordinarily so from this downturn in commercial real estate. So jump on that. We also do non-correlated investments outside of real estate. We've done energy before, and now we're doing litigation finance, litigation funding, which is the process of profiting from lending to attorneys who are working under contingency, and we get returns derived from the settlements, providing access to justice, just like our debt fund provides access to housing for tenants. And so we do completely non-correlated legal industry, unrelated to Forex, real estate, the stock market, completely uncorrelated to all those. Really strong, steady state growth of the legal industry. We get to profit from those investments in litigation funding portfolio. So really excited about those. I also have a book, if you guys want it, and give away books. We have it's an Amazon #1 bestseller, Lessons from Thought Leaders. We've got some amazing people, Navy SEALs, Phil Collins, lead guitarist of Def Leppard, actual rock star, NFL, NBA players, investors, entrepreneurs in there. I tell my whole story, how I lost it all, the rise and ebbs and flows through my high-tech career, how I built my single family, struggled, traded it up to a larger multi, diversified, and then founded Passive Investing Mastery. It's a really cool story. Hopefully it inspires you along your journey. I give it away. You can download the ebook and or you can get a hard copy. I sign it and we send it out. So I hope that that is a give back that we do to try and inspire people along into their alternative investing journey. Just scan that barcode or go to our website, passiveinvestingmastery.com/book. And make sure you put the name of this series in the note, because we get a lot of random form fills, and unless I know where you came from, I'm not gonna sign it and send it out. So make sure you put something in there, and we'll get that to you. Before we get to the Q&A, the very next event is on venture capital for passive investors, syndication strategies that work. Two really great colleague, friends, experienced guys that I've known and liked for some time. Trey Taylor, family office, as well as Isaac Bennett, works for a venture capital firm. And we've invested in heavy in real estate together, but these guys are also out diversifying into venture capital. We're gonna learn a lot about that. It's gonna be educational for me and you. But let's dive into the Q&A. We need to be laser about this, because as typically happens, we get way too many questions. I think we have some 50 questions. I think I was able to layer in about half of them. But what I'm going to do is I'm going to go to the top, and I asked that the Steven and Andrew, if we could try and just be, pretty laser with these and try and get through them so we don't miss the chance to get all these questions answered as we go. A lot of great shout outs to people that have been following these two individuals. A lot of really encouraging comments made about what was said. A lot of other traders on here just giving the thumbs up. Amital, Anis. It says a comment from Anis says, currency trading is often referred in futures markets. If I'm not wrong, Forex is referred to spot markets, but it's essentially Forex exchange. One currency pitted up against another. Let's hear your thoughts on that.
I personally, once again, kind of going back to that leverage, so what? I mean, all I'm looking at is price movement. I really am not concerned about, a title or what it's based on. I'm really just looking at price and patterns and specific things in a strategy.
Yep, absolutely.
Go ahead, Andrew.
Oh, so absolutely. You're looking at the spot market, what the price is right now. Is there an opportunity to buy that pair, sell that pair? You could use something like Steven said with that 50 EMA. You could use things like strength and weakness. You could look at a monthly chart, and that's moving up. So you can look at a daily chart and only look for buy trades. There's all sorts of things you can do, but essentially we're looking at the price. Is there an opportunity here or not? We'll move to the next chart.
And so with all the rise and fall of these, and it feels a lot like stock market trading to me. And so Kenneth asked a question a while back: how does currency trading compare to investing in the stock market and in bonds? Maybe you guys can address that a little bit.
I would think the only difference would be how much you're risking. And remember, you're in charge of your risk. So that would be the only difference. If there's a lot of volatility, let's say, in the stock market, but there's no volatility in the pair that you're looking at, well, then that would be a difference, because you're probably less risk with the pair. But to me, the only difference is, since I'm looking at patterns and different ways in which to view the trend, it's really all about risk.
Yep. I've never traded the stock market, so a little bit hard for me to answer that one. What I would say is, regardless of where you live in the world, the Forex market's a 24-hour-a-day market, so it makes it a lot easier. You don't get big gaps and spikes like you potentially could in stocks. You can buy, you can sell. You don't need to know a lot about different markets. You can just look at the 8 currencies that we mentioned. You potentially, depending on your strategy, can now look at cryptos and indices, metals, commodities, but it's, it offers so many options. Once you know how to trade, you can trade.
Well, the fact that you can limit your risk is certainly appealing over the stock market, right? Because in this particular case, you're literally dialing your downside protection. Very interesting. So it sounds like a lot of work, Donald said, and we talked about, like, in the beginning, you got to learn. You got to put in some time to learn the craft, right? But after a while, you'll be able to do this like a wizard, and the upside's big once you get good on it. People tend to, once you get over the statistics and over the hump, get properly trained, people do tend to make pretty strong returns. So that we already addressed how do you mitigate risk, and how we talked about indicators for currencies, Michael and Bill. We talked about algorithms versus manually, Michael. I think I wove all that in there. And there's questions in here about, man, I probably am nearing retirement, Gaines says, and I'm not really sure. He wants to manage these investments, possibly do the learning curve. Are there other fund managers I can invest with that will do this for me?
I'm sure there are. I don't know of any. I mean, because I'm not, I'm more of an educator. I'm not involved in the fund side, but perhaps Andrew knows more about that than I do.
I would say exactly the same. Like they're out there. You could look at copier services. You could do all sorts of things like sort of follow what other people do. It depends, I think, if you want to do this for yourself or not. Yes, you could invest with other people, but I think the issue then comes down to, if you want 100% passive, great. If you want to learn a little bit, then you probably want to learn how to do it yourself.
Yeah, and there's another one here about, is there a list somewhere where I can go from Robert and find good or safe brokers to start trading with?
I would pick, rather than safe, I would pick with someone where, they allow you to do it yourself, where you don't want to pay for someone's advice. Since, educators like Andrew and myself are teaching you what to do, there's no need to pay for a broker to tell you what to do. So I would, in the beginning, especially, try and keep your commissions or a brokerage commission, if there are any, sometimes they're very minimal, as small as possible, because that also plays into the risk. A lot of times I include my commission costs. That's part of my 1%. So, even though it's very minimal, that's all included. So it's just another expense that you want to keep down as much as possible.
Yeah, there's like heaps of good brokers out there. The question specifically about, what brokers are there, then I've got a list of brokers I personally use for years myself who I'd recommend. I would say that, having a lot of clients in the US and staff member in the US, that you are a little bit more limited in the US with which Forex brokers you can select. I can certainly give you a list of 2 or 3 that I hear.
Reach out if you want to hear that, right? Andrew and Steven perhaps can get you going on that. There's a comment here from David about Steven being on a cruise ship with that water level rising and falling as he's talking.
Well, the way it's raining over here in Los Angeles right now, I may be on a cruise ship pretty soon.
I hope your neighbor's not chipping away at an arc right now.
Yeah.
So let's see. We've covered a lot of these. The market can be a beast at times. That's true, right? Comment related to investing in the right times. Bill, we talked about algorithms, black swan events a little bit, and we talked about the 2008 and how the algorithms didn't work out so well, and audibles. I think we covered that. If we didn't, please place additional questions below. Kenneth asked about how inflation and interest rates impact foreign currencies. What are you going to, and I will add to that, how do you see shifts in this new administration affecting foreign currencies?
Go ahead, Andrew.
For me, it doesn't really matter any political event, anything like that, because any news event doesn't matter, because I'm only trading what I'm seeing on the charts. So I can have personal thoughts of what's happening in different currencies, different countries, interest rates, employment figures, all that. But I still look at what's happening on the chart. And why do I do that? It's because that's what's really happening in the market. The danger is you could see like your monthly non-farm employment change figure, and you could go, okay, we're expecting, pick a figure, 200,000 jobs, and it comes out as 250. We could go, wow, it's fantastic. It's better than we thought, but last month may have been dropped down. So news trading to me is always tricky. Fundamental trading is tricky. Look at the charts. They tell you what's really happening.
Yeah, I stopped looking at news over 4 decades ago, and I'm living proof that you really don't need it. I mean, I'm not telling you that to not look at it if you feel you need that, but there's really no need if you know what you're doing. I'm not getting back to stocks, taken away from currency pairs, but a perfect example is that if you looked with that 50-period moving average back in 2008, a weekly chart of the S&P, price was below the 50-period moving average for consecutive days. This was in 2007. So just looking at that information alone would have told you there's negativity in the market prior to all the fundamental news that came out later on. So the price really tells you many times in advance, just to keep it simple. So sure, if you want to look at news, I personally haven't looked at any news in over almost 5 decades.
So there's a couple of questions in here. Well, David made a comment that after 15 years of trading, one thing I have learned is the most is what not to do. So there's other questions in here. I think we've mostly answered about the expertise needed, Michael, to be successful. I think I drilled in. I actually asked that question because of yours. I think we talked about the time and the effort required to be successful. How much people are losing that aren't successful? Large 80% people not actually making money when they start out. Really important that you do it the right way. Educate yourself. And then there's comments in here about it being semi-passive, right? Well, once you learn and you're on board with it, you're not working night and day, right, at it. But there can be some semi-passive sort of approaches to it, even as an active. Would you agree to that?
Yeah, absolutely. I mean, as Steven said near the beginning, you could trade once a month, once a week, once a day. It's up to you. I personally trade no more than 30 minutes as a full-time trader of chart time per day. If
your full-time 30 minutes a day, that's your full-time?
30 minutes of chart time, 15 minutes at your 5 p.m. New York time, and 15 minutes at 5 a.m. New York time.
I think Andrew is the kindred soul here. I think because we're right along the same wavelength. I exact same way I feel about it.
I'm gonna write a note to get some people that disagree about stuff.
Right.
Teasing. So what are the factors to evaluating? Sorry, actually, this is a better way. Learn so pips. Why don't you talk about what pips are? And the other one that I wanted to look at, I'll find it eventually, but why don't you start out with what pips are?
Okay. So a pip is a price index point, I think it's officially called. So 1 cent of movement has 100 pips within it. So it's 1/100 of 1 cent movement. Now you don't need a very big movement in the Forex market to have a lot of gain or loss if you get it wrong. So it's 1/100 of a cent. The issue is that a lot of people count their success in pips. If you have a look online, everybody goes, I made 100 pips on the trade. To me, that's irrelevant. I, as mentioned, risk, let's say 0.5%. If I have a 3-to-1 reward to risk trade, it means I'm risking one part, 0.5% to make 3 parts, 1.5%. So for me, regardless of the trade, regardless of its stop loss and size, its time frame, how long it's in the market for, have your low controlled risk, high reward to risk trades, and forget pips.
Yes, the way I define pips, it's just a unit of measurement. That's all it is. And every market, tradable market, has a unit of measurement. Stocks have 1 cent. Futures have different units of measurement, and pips are just a unit of measurement in currency pairs.
A couple questions I think we've already answered. Ferdinand, we talked about leverage. I wove that one in there. We talked about contrasting this versus other investments, other passive investments. Donald, if there's any further questions, go ahead and drop it in. Nice is saying, thank you so much. High risk is a killer and suicidal, especially in Forex, Anise is saying, and I think we all agree with that. Let's see, how did COVID impact the strategy?
Well, I can just speak. COVID, if you remember the beginning of COVID, when it went straight down, the market, we had some of the best gains ever because, our strategies generate buy and sell signals. So all we're looking for is just a real strong movement, and the movement was down. And then when the market started to go back up, and even with currency pairs, when you have the volatility, I think it really doesn't matter. What you're looking for is really trending volatility, regardless of what market. What you really don't want is that kind of when the pond just dries up and there's no movement at all. That's where you get that whipsaw, and that can happen at any time. You don't need COVID or anything. It can happen in the summer months. So what you're really looking for is a really strong trending market, regardless of what it is, and then you just jump on board.
So let's talk about correlation to stocks. As we talk about a lot of non-correlation, meaning things that don't rise and fall, with the majority of passive investors have, and then their ROA, 401k, or the stock portfolio. Do you see Forex investment returns correlate somewhat to the stock market?
I'll
I
have to let
personally
Steven
don't.
answer that one.
Yeah, I personally don't know. And I don't look at that either. Once again, I hate to be, broken record, but no, it's of no interest to me. I teach my students to focus on the one market you're trading. That's all. I mean, because you don't, as my mentors taught me, it's Steve, you're overcomplicating things. You're looking at too many different indicators and markets all at one time. Just focus on a few things. And so I think when you start to do that, look at different correlations and everything, you start to go down that path, a slippery slope of when you're making things a little bit too complicated. I know I think differently from other educators, but that's what I just like to focus on. In fact, I only look at one market at a time. So if I'm trading currency pairs, if I'm trading futures, stocks, that's all I'm looking at.
So Donald is saying he's retired and looking for fixed income. Is there a way to use Forex to get fixed retirement income?
Go ahead, Andrew.
Fixed retirement income. Does he want to do this for himself?
It sounds like it.
If he wants to do it for himself, then fantastic. Put a bit of time in to learn how to do it properly, and you'll definitely do very well over time. Just depends if he is, I suppose, if he's retired, he's got that time to put into the education, the learning. Fantastic. You're never going to get a straight, perfect line. That's the thing. Market conditions change all the time. When we said that 5 to 10% per month, some months you'll probably have losing months. It just happens. Some months you might have 20% gain. There's never a straight line in any equity curve.
Sounds like the answer is no. You can't get fixed income. You can get some income, though, possibly. So what are the tax implications of gains and losses in Forex trading?
Tax implications?
Yeah, how are they taxed, gains and losses?
I'm not an accountant, and I would imagine every country would be very different. I can tell you what
Steven.
I personally do, but
yeah.
Once again, I'm sorry. I'm sounding like a broken record. It doesn't matter to me. I don't even look at that. I just look at, if I'm profitable or not. That's the price of doing business. Yeah.
Okay. And
most of my trading is day trading. So it's I know not everyone day trades.
Let's see. It sounds like Brad's talking about an opportunity for compounding gains as your reinvestment. David, takes a lot of discipline and persistence. Can I do it with retirement accounts? Right. I would think, of course, self-directed retirement account.
Sure.
And we can help you out with that, James, if you're looking to get something allocated into self-directed. We've talked a little bit about correlation, geopolitical events. You guys don't even watch the news anymore. So Mike, I think we answered that question. What role do central banks play?
You're going to get the same answer.
Same answer. Look at the charts.
Yeah. This is more along the side of the fundamentals, and it's just traders. I'm not talking about investors.
Don't involve all that. Your indicators.
Yeah, traders don't get involved.
Yeah. Okay. And I mean, I just did look up the tax implications, and it looks like it can be handled in various different ways depending upon what you're doing. So probably need to talk to your CPA about that. There's no easy answer to that one. So I'm going to go through these. I mean, there's some people really hanging in here to the very end. How does currency trading fit into a passive investor's broader asset allocation strategy? So what part of my portfolio should be allocated into this? And so what would you guys say? So if somebody comes along and they're like, hey, I have $5 million. I'm not real sure how much I should, start playing in the sandbox of Forex with. And so maybe I start small, but eventually, what allocation do you think is responsible or the right choice in this? What do you think? Andrew,
right off the top of my head, I would say 25%. Just right off the top of my head of my account, whatever I had.
I'm going to have a different answer to Steven for the first time, and that to me, it doesn't really matter how much you have, because it depends if you want to put how much of your own money into it as well. Learn how to do it properly first. But with these things called prop firms around, if you can trade properly, you can use someone else's money and make a percentage gain on that as well. So you don't even have to put any money of your own into it.
Interesting. Yeah. So in our world, we like to show the allocations of the wealthy. And Lily, if you look at any of our webinars, we'll show the wolf wealth from middle income, high income, ultra wealthy, where they have allocations of 10, 20, 30+%, real estate, 20 some percent in other alts, and the rest in bonds and stocks. And so you really need to look at allocations in those kind of pie charts, and you set up a call. You're really about pie charting your allocations and understanding what do you think the allocations are, what risk do you see in each of those allocations, and do you see those rising and falling? Do you feel like you're well indexed into non-correlated investments? But typically, our belief is you need to be in lots of different investments and foundations in lots of different market fundamentals. So we would never say something like 25. We usually say like no more than 5 to 10% in any one strategy, and hopefully within that strategy, you're diversifying into different kinds of investments within there. Again, it's about capital preservation and diversification, and that's my belief. And again, none of us, I don't think, are financial advisors, CPAs, or attorneys. So this is not finance, tax, or legal advice.
Nope.
But that's typically my answer. Lily, set up a call. Happy to chat more about my own personal strategies. Gary asked if I have to be an accredited investor to invest in Patrick's funds, and that's true. Yes, you do need to be an accredited investor. 200,000 in income, 300,000 when combined with their spouse, or $1 million in net worth, not including your personal residence, in order to invest in the passive investing master affiliate funds. And we just have a few more. Michael's asking again, is there a way to do it truly passively? And it sounds like the recommendation is no. You really need to participate to some level from the gentleman here, Michael. And then let's see, just put my name in session, please. Currency trading. Okay, so session, again, some great, yes, gaps in software, crazy. I think we pretty much got these questions handled. We're towards the end. This should be treated as a business. This strategy should be treated as a business if you're serious about it. And although we're saying like the full-time trader, these guys are like at 30 minutes a day. You do treat it very seriously like a business. I'd probably agree with that. And I think that gets us to the end of this. If we missed your question, maybe the last question, do your research on prop firms if you want to go that route. Okay, so that was just a comment. But I think we got it all. Steven, wish we could have seen you, but I understand. No problem.
Maybe next time. Maybe next time.
There are days when I would like to turn off my video all day too. And I'm
Right.
sure the audience have seen enough of my face. They probably wish I did the same. So hopefully we didn't get anybody seasick with your volume thing going up and, up and down. But really great to have you, Steven. Andrew, amazing job. This was an incredible panel. Really rock stars, really strong in these asset classes. Couldn't be happier with your guys' answers, your participation. Everybody here, don't forget, 1 week from today, we're going to talk about venture capital for passive investors, syndication strategies that work. I have two really solid guys that are going to come in, talk big advice for people who are actually doing this and doing it successfully. And so really excited about that. 1 week from today. Andrew, Steven, if you want to say your goodbyes, we're going to wrap it up now.
I just want to say thank you for inviting me. And I just want to say it was a pleasure meeting you both, Patrick and Andrew. And I'd love to work with both of you again. It was great.
And likewise, thank you so much for inviting me. Nice to have someone from outside the States, different part of the world. And Steven, yeah, look, it sounds like that we do very, very similar things and think the same, which I suppose, like you said, over time, you get to work out what works and what doesn't. So yeah, thank you for being here. Thanks for participating with me. I really enjoyed it. And thank you, Patrick, and all your team.
All right, the replay will be out in a couple of days, and we'll make sure to pass it to Andrew and Steven. And we'll look forward to seeing everybody else 1 week from today right here to learn about venture capital. You guys all have a good evening.